It's a new day, a fresh episode of Business Morning on Channels Television. Well, let's explore the world of business for the next 55 minutes. You're welcome. I'm Ini John McQuarrie. Let's start from the global oil space as prices slipped today, trimming big gains from the previous two sessions amid uncertainty over near-term demand as cases of the highly contagious Omicron variant of the coronavirus surge around the globe. U.S. West Texas Intermediate crude futures slipped 20 cents to $82.44 a barrel, while Brent crude futures shed 19 cents to $84.48 a barrel. Data from the United States Energy Information Administration yesterday showed that fuel demand has taken a hit from Omicron, with gasoline stockpiles increasing by 8 million barrels in the week to January the 7th, compared to expectation of 2.4 million barrel rise. Still, U.S. supplies are set to rise as producers are paving the way for faster production by expanding well completions in the country's top shale oil field, the Permian Basin of West Texas and New Mexico. And still in the global space, global community recorded an alarming rate of cyber attacks in 2021, with a 50% increase in overall attacks on corporate networks and compared to 2020, and Africa emerging as the most targeted area. According to a report by multinational IT firm Checkpoint Research, the average number of cyber attacks increased by 13% across Africa last year, with Nigeria and Kenya as the most targeted countries on the back of increasing internet penetration and device availability. The report shows that a 40% increase in cyber attacks, with one of every 61 organizations impacted by ransomware each week globally in October, and reached an all-time peak by December, with 925 cyber attacks reported weekly by organization within the final quarter of last year. Well, let's come to Nigeria now. The country's inflation is expected to drop further to 14.9% in December, down from 15.4% in November, and that's according to the latest forecast by economic advisory firm Financial Derivatives Company. In its latest forecast, FDC says the latest drop in the country's headline consumer price index would mark the 9th consecutive decline in inflation, ahead of the official data from the National Bureau of Statistics. At the same time, it expects the food inflation to drop from 17.2% to 16.75% month on month due to harvest season, which led to moderation in the price of basic food commodities. In the meantime, the National Bureau of Statistics is expected to release the December inflation report on the 16th of January. Well, that conversation with the FDC will continue just after this break. We have with us Bolanle Agbaje, analyst with Financial Derivatives, to talk about inflation and other issues in the commodities market segments. Just stay with us. It's Business Morning on Channels Television. You're welcome back. Well, the World Bank has forecasted that Nigeria's economy will grow by 2.5% in 2022 and 2.8% in 2023, placing this beside the projection of high inflation. And now the United States Federal Reserve has confirmed that inflation is at its highest in 40 years, and that's at 7% in December 2021. And of course, with the forecast of the FDC on our inflation, well, we'll put all of this together, and Bolanle Agbaje has a way of doing that. Thank you so much, Bolanle. Good to have you for the second time this week.
Thank you for having me.
So FDC is projecting moderation of the inflation again for the 9th consecutive time. Yes. Meanwhile, we see a highest in 40 years in the United States. Yes. Where are we? How do we get here?
It's nice that we're on the right side of things compared to other nations. But looking at Nigeria, it's the inflation for the month of December. And what did we see in December? In December, there was moderation of prices like we had seen in the previous 9 months. And the fact that, demand didn't increase significantly like the way we would see in December of previous years. And also, we didn't see any, drastic changes with supply. We saw, the harvest season coming, and this had already balanced, or offset the demand that we had seen in the market. So there was no drastic, changes to the underlying demand and supply trajectory that we had seen.
Okay, so this is why FDC sees moderation
in
it. So this figure from the US, the 7% now,
it's more than double its target at the moment. But that's just because, for the past 2 years, due to the fact that we had seen this COVID-19 surges or increase in infection rates, some of these nations had, adapted policies, expansionary policies that would, target individuals within the economy. And that obviously led to increase in demand. The fact that we had lockdowns before that created, pent-up demand in the market, and that had, contributed to the high inflation prices and also the supply disruptions as well, which they're still facing at the moment. But going forward, the Fed, expects that with increasing interest rates in this particular year, at about, I think they're planning on increasing interest rate by about 3 times this year. That should, reduce inflation. Although the Fed believes that inflation is transitory as opposed to persistent, but the World Bank has come in to say that, this particular inflation is now looking like it's persistent.
Yeah, because last year, I think for months, we're talking about transitory, and we did not see it transiting anywhere.
Yes, and that's just because, we had a driver. We had the fact that, the infections came in, and that was what drove, the increase in inflation, or the disruptions that it caused was what drove the increase in inflation rate. But we will definitely see what happens. In the last time this happened was, during the Great Depression, where Paul Volcker came in to, solve this problem by aggressively increasing interest rates, which caused, the Great Depression. But hopefully this year, between this year and next year, we will definitely be watching. It's more or less going to be an interesting, one to watch, see how the Fed would actually bring this inflation down.
And, energy prices also contributed to all this disruption. Yes. The semiconductors, part of the supply disruption.
Yes.
And we don't have most of that solved because we still have energy issues.
Yeah, but you do know that in 2019, even before, we had seen this COVID infections coming, OPEC Plus were already, aggressively trying to increase oil prices. So this followed on for the next 2 years. So coupled with the pent-up demand that we had seen in the market, the fact that those lockdowns, reduced demand aggressively, and when we came out of those lockdowns, we had seen a drastic increase in the demand for, oil, gasoline, and also the climate change issue. Climate change is more or less something else at the moment. So that had also increased the demand for energy prices as well. And I'm sure Biden administration will be frowning at this because their plan is to go towards more greener energy, but this is not the case because you're seeing the fact that the U.S. is also trying to increase its oil production. I think their current oil production is about 11%, and this is supposed to increase to about 12.3% in the next 2 years, according to the EIA.
And we see countries also going back to coal. More coal in UK, in Asia, and all that.
To kind of, as a substitute as well, which is definitely not, the cleaner energy we're looking at, yes.
Okay, so coming back to Nigeria now, the World Bank has forecasted Nigeria to grow by 2.5% this year. Is that a good thing?
Yeah, it's not necessarily significant. This is just 1% up from what it was or what they had forecasted for last year. And that's just because, the World Bank has seen that most emerging market economies and developing economies are going to be struggling. The fact that, they're seeing signs of increased global inequality, the fact that they're seeing indebtedness, increase in most of these African nations in particular, is a sign why, is the reason why, they're predicting this slight increase in GDP.
But do you even see us meeting this 2.5?
If we do things right, yes.
What are the things?
If we're, strategic about our revenue generation, if, most of the debt that we've acquired is focused or is, focused on the supply side of the economy. So you're looking at education, infrastructure, those things that would replicate, or increase growth in the long run. So I think the government is definitely working at this. It's something that, is encompassed forecast in the budget. They're looking for ways to generate revenue to fund some of these projects.
But it seems when you mention revenue for the government, it's tax. Now we have a lot of tax.
But
and we also, we also have the adverse effect of some of these taxes.
But they do say, tax now, enjoy later. So it's more or less it's a necessary evil that most economies usually adopt. But considering that we're already at the lower end of of the spectrum, it's just something we have to watch.
Yeah, but people are not saying the government should not, of course, pursue taxation, but they're saying, why don't you increase the tax net? Why don't you work on improving the mechanism so you can capture more people instead of burdening the little number that you have?
Yes.
For instance, the 10% on carbonated drinks, it could result to, reduction in demands, which will affect employment, which will also affect tax being paid to the government.
Yeah, so it's more or less progressive tax, that the government should be looking at, as opposed to taxing, final goods. It's much, it's much more humane to tax, the manufacturers, those that, produce goods within the economy. Because if you tax the final goods, it would mean that, the final individuals within the economy, the consumers are the ones that are facing, this tax the hardest. But at the same time, there's no right time to tax. There's no, there's obviously a right way, but it would always hurt others and, benefit some.
Someone will always be affected.
Yes.
And so yesterday we talked about exports, and because this is another way of revenue.
Yes.
And our guest then is into export and sale.
Yes.
And he did note some of, for instance, he gave an example of an individual who wanted to export yam.
Yes.
And because of all the delays and
the bureaucracy.
yes. By the time the yam got to the United States, it was bad.
Already, yes.
So what he does now, what that individual does now, is to ship his yam through Ghana. Now, we're losing money, so if we want to make money, are these not areas we should look at?
To cut,
instead of just, taxing people that you have fintechs, you have the young guys who are trying to come up, and then those are the people we are breathing down on. They have to do this. The courier services that have not even found their feet, now they have to pay tax. I mean, how strong is our courier sector?
It's definitely something that I'm sure the government would definitely be looking at. Although, they're taking their time to adapt some of those policies, to cut the bureaucracy in some of the agencies that exist, and, find ways to make business much easier for, individuals within the economy. But the only thing we can do as analysts is, give our suggestions, but actually doing or making the moves to impose policies that would actually affect their government lies, within the hands of the government.
Yeah, obviously. Well, we also see on your slide that China applies brake on African lending. That's the Belt and Road Initiative. What did Africa do wrong?
Africa is doing so much that, it's not really favoring the Chinese loans at the moment. I think the Chinese government has more or less seen that it's not benefiting as much from increasing loans to Africa. I think they cut it from about $60 billion to $40 billion, which is huge, about 33%. It's not so great for us. It puts us at risk, considering that we have over $3.8 billion, dollar loan from China at the moment. And I think what is more, scary at the moment is the fact that, the Ugandan airport has been seized by the Chinese government just because...
After some denials there, I remember.
Just because, they defaulted on the loans. And it calls to question what would happen to Nigeria if we also default. Well, I'm sure the government is definitely not, but we've never really, we have defaulted in the past, but not in this way. So hopefully, I don't think, our case would also be the case in Uganda. But they're looking to, invest more in SMEs, private investment flows, and other aspects that, will seem more favorable to them.
Exactly.
Yes.
So, I mean, we shouldn't be so scared. I think we're in a good place when it comes to
I think out of all the African countries, I believe that we're in a good place. We have a better relationship with China at the moment. So I think the only risk there is, the reduction in loans that we'll probably be getting from them in the future. But at the same time, the question is, when would Africa stop borrowing from China? When would Africa stop borrowing in general? When would we become self-sustainable like the way it is in other countries.
Yeah, and we keep talking about the wealth of the African markets, the billions of market that is there, the potential. But when
We
it
have the
comes to, we
potential.
have AFCFTA, which is just lying fallow now. I mean, 2021 was declared Nigeria's AFCFTA year, and yet when you talk to people who were supposed to be there, oh, we're working on the guidelines, oh, we're working on the area. Well,
But we had the disruption that COVID brought, so
I mean, that was
hopefully,
2020. I mean,
yes, we did have that, and I'm sure most countries are still focusing on building, their economy, recovering from this, infections that came into the market. But I'm sure as the years go by, it's something they will definitely go back to and make sure, they gain the benefits from the trade.
Let's remain optimistic.
Yes.
And then oil price slips, but it's still above 80, so we are still in a
still
good
very
place.
good. We're still very good. I think the only risk is, the increase in production from the U.S. in the nearest term. I think this year, next year, it's something we're definitely going to be looking at. Would supply be increasing significantly? That would obviously undermine demand, and also the fact that demand is also reducing at the moment, just because we're seeing a surge in Omicron cases. So that poses another risk to the oil prices as well.
So is this too short a period for Nigeria to maximize this time and brace up for the possibility of a reduction in price?
So right now, even with prices increasing, it calls the question: has our external reserves reached an inflection point? Because we're not seeing the reserves increase as much as the way prices are increasing. So it's something we're still watching. I think by the end of the first quarter would actually determine whether we had seen a significant impact of the increase in oil prices on the reserves. But also cocoa price, the cocoa production rather, there's some good news around there. The fact that, like I mentioned on Tuesday, we had the risk of the dry weather, but it seems that, the delayed rainfall in the month of September and November is actually, keeping water in the soil, so it's more optimistic for the oil production, especially in the southwest regions of Nigeria, which accounts for about 250 to 280,000 tons per year. So that is another good news that should actually contribute.
But before you went to the cocoa, I wanted to ask, because when you said that Nigeria our reserve doesn't seem to be reflecting, the increase in price. So, I mean, it would be nice to look at our production.
Yes, so our production is, increasing slightly.
What is it now?
We're not seeing huge investments. I think it should be about 1 point at the moment.
It's gone down from 1.2?
Yes. So it's about 1.2, 1.3, but our target usually is about 1.8.
Yes, that's supposed to be our...
Yeah, that's supposed to be our target. But I think we're not just seeing new investment, in that space. Most oil producers are seeing the risks of, the oil markets, and they're not really sure of where, the oil prices are really heading towards. There's a huge risk if we actually see oil prices decline significantly, which we had seen before. So we're not seeing that. And also the production, we're seeing, what is happening in the south, in the other parts of Nigeria, Niger Delta parts of Nigeria and all of that. So there's the risk with, increasing production significantly within Nigeria.
All right, Bolande, we sure have a lot on our plate in Nigeria.
Yes, we do.
Looks like we never took a break from 2021. We just continued.
But it should be positive, hopefully.
We should be positive and realistic, too.
Yes, yes.
All right, Bolande Agbaje, analyst with Financial Derivatives, thank you so much for sharing your thoughts with us, and enjoy the rest of your day. So after the break, microfinance banks have just about 3 months to meet up with the recapitalization requirements of the central bank. Are they able to meet up with that? We'll find out. It's Business Morning on Channels Television. Welcome back. In 2018, the Central Bank of Nigeria started the recapitalization of microfinance banks, which had minimum capital base for national microfinance banks as 2 billion, state microfinance bank had 100 million, while the unit microfinance bank had a minimum capital of 20 million. Well, the deadline was extended because of the pandemic last year, in 2020, and now it's about 3 months to when they're supposed to actually meet up with that. That's in April. Well, let's find out how the microfinance banks are gearing up for this deadline. We have the president of the National Association of Microfinance Banks, Mr. Yusuf Ahmed, joining us from our Abuja studio. Good morning, Mr. Yusuf. Good to have you on the show.
Yeah, good morning. Thank you.
So I believe your members, we could say, have had enough time to meet up with the recapitalization requirement. Of course, you had the pandemic disrupting, but do you see all your members scaling through?
Well, you say we have all the time, but we don't have the resources. And to answer you directly, I don't think 100% there will be 100% compliance. As at the last survey we conducted in the industry, barely 35% of our banks were, really ready to meet up with the requirement. That was sometimes in March last year. And a lot has gone under the bridge, and we are hoping that that 35% will have maybe improved to say 50 or so. And with that kind of percentage, I think it will not be good for the system, for like half of say 900 microfinance banks to go down because they are not able to meet the new recapitalization regime. But in your opening remarks, you made mention of 2 billion for the national microfinance banks, 100 million for the state, and then 20 million for the unit. That has been increased by 1,000%. That is what we're expected to achieve by end of April 2022. That means for the national microfinance banks, they are required to increase from that 2 billion to 5 billion. And then for the states, from 100 million to 1 billion. And then for the units, well, thank God we made some complaints, and CBN saw reason in it, and then they splitted the unit into two: urban unit and then rural unit. So for the urban unit, they said from 20 million, they have to show the capital to 200 million. And then for the rural unit, from that 20 million to 50 million. So these are the figures that we are expected to meet by end of April 2022. But like I've said, I don't think, and I believe from the survey we have made, the indicators are, is that our members will not be able to meet that deadline. And we have been talking with CBN, we have written, and we've been making advocacy to see that these figures are reduced. There is a good intention for increasing the, minimum share capital, because of course that will enable us, do more larger, scale business. However, at this time, the timing is definitely wrong, because the Nigerian government, system is just coming out of recessions after recessions. There is the COVID, pandemic. Now there is the Omicron. There are so many things against us, achieving these targets. And, the anti-money laundering and things like that, you will not get, external, capital to, inflow to come into the country. So there's general hardship in the, economy. So where are we expected to get this huge amount, the 1,000% increase? We are appealing. We have been going around, across the country, meeting our members to see how we can, within the different options that we have, to raise our capitals. We are doing it. It's a work in progress. But just to answer you directly, I don't think we'll have 100%, compliance by April 2022.
So what about options such as mergers, the banks did it during their period of recapitalization. Don't you have that option?
Like I've told you, we've gone around the states, through political zones, had meetings with stakeholders in the industry, in the subsector. And that merger and acquisition is one of the options, many options. You have mergers and acquisitions. We have, you can sell your license. You can buy. You can also acquire another bank. So these are the different options, and then you can inject new capital. So we have 4 different options available to our members. But like I'm saying, the timing is wrong. And don't forget, microfinance banking is a community, based banking. And I don't see one community, with all their ideas and their, beliefs, to now go to another community and then want to merge. There is going to be this difference, in community, ideologies. So it's one of the options. Of course, if you are in the same town and there are so many microfinance banks and some will not be able to make it, yes, the bigger one can go down to the other ones, see how they can either acquire them or they can merge with, spelled out, imagine, arrangements. But it's a little bit difficult because it's a community-based, banking. So it will be a little bit difficult.
So if you had your way now, what are you asking for?
Yes, we have written and requested Central Bank, yes, as an association of about 900 members, we are saying increasing the minimum share capital is a welcome development, but not to that quantum of 1,000%. We are saying for the national, they should come down from 5 billion to 3 billion, at least within the time frame given. We believe most of the national microfinance banks will be able to make that 3 billion. And then for the states, which is from 100 million to 1 billion, we are saying bringing it down to 500 million. We are certain for any serious bank that wants to have that state license to operate within the local governments in the state should be able to increase from 100 million at least within the time frame to 500 million. And then for the units, now for the units of the urban from 20, you are asking somebody to add additional 180 million. That to us is unachievable. So we are requesting that 200 million should be brought down to 100 million. So from 20 to 100 million, that is additional 80 million. I think any serious bank that is in the rural setting in the state capital should be able to make that. And then for the unit who are, the rural unit who are in the hinterland, from at least from that 20 million to 35 million, we think is an achievable figure. Once CBN agrees with this, and then with the pressure and the enlightenment we are making to our stakeholders, we should be able to have at least 70 to 80% compliance by the end of April 2022. But if CBN doesn't shift ground, I am telling you, we will not be able to make up to 50% compliance.
So maybe you should tell us, what would Nigeria be missing or losing if, like you said, about only 35% of your members make it through? What gap would you be leaving as microfinance banks?
Definitely, there will be a huge, huge gap. Don't forget, the microfinance banks are the ones servicing the MSMEs. And from the last statistics I've seen, the SMEs are, they are about 96% of registered companies in the country. And they contribute to about 49, say 50% to the GDP. This is great. And look at the number, look at the number. So if microfinance banks are allowed to just fizzle out like that, it's not a natural death. If they are made to die like that, the rippling effects is going to be not only to the surviving microfinance banks, it will also rub up on the commercial banks. Don't forget, there is a compulsory relationship between microfinance banks and the conventional banks. Every microfinance bank is supposed to have a corresponding banking relationship with a commercial bank. And then if the microfinance just died, like this, the effect is going to be very huge. Let's say the 35% that I said from now to April 2022, maybe 35 to 40 to 50% will be able to make it. Those ones that are able to make it, by the time the other 50% go down, it will definitely have a very, very terrible effect on them. There will be a run on other existing surviving microfinance banks. And there will be general, there won't be confidence. The confidence will be lost. The rumors will go that all the banks are dying. Even those ones that are surviving, it's just a matter of time. They think that's what the public will think. They will also go down. So we are saying it's not that we are not interested and that we don't believe in the capital increase, but please, they should come down to a reasonable limit and then allow the banks to grow organically, at least by improving your shareholders' funds every year. At least you are growing. That capital is coming in. You are now retaining your earnings and things, and then your shareholders is boosting. That, we believe, is growth. But where it is by fiat, where do we get the money? We don't print money. It is our belief, if we can get this and achieve it, it's good for us, and it's good for the public. But where we don't achieve it, and then banks are just crashing like that, it will send a very, very wrong signal, and there will be serious problem in the financial system.
Okay, and now on the other hand, assuming that the central bank hears you now and they decide to, lower the demands and all that, so you have more liquidity in the microfinance space. I mean, one of your major functions is supposed to be financial inclusion. So what else would you be bringing to the table? What new thing would this increased liquidity bring to the Nigerian economy?
Yeah, thank you. You see, like you said, the microfinance banks, like we know, are serving the down, bottom of the, pyramid people. There, when you go there, you have a lot of unbanked, underbanked, populace there. Our duty, because we are closest to the grassroots, we are the ones to bring them on into the net, okay? So financial inclusion is one of the major things that can be achieved through microfinance banks. If you get microfinance banks out of business, that financial inclusion drive of the government will be, defeated. That's one. That is one. So I believe central bank, as always, I know they have a listening ears. They should listen to us. That is the essence of having the association as the umbrella body of the almost 900 members. Let's sit down. We want to improve the minimum share capital of your banks. What do you see? How do you think you people can do that and achieve that? We are partners in progress. We will sit, we will discuss, we will now get a buy-in from our members, because at the end of the day, we want the system to be improved. But where decisions are taken solely without consulting us, and then it's just slammed on our faces, definitely you will see that only the few that have the muscles that will be able to make it, and most of us will just go down and die naturally with people's deposits and things like that. It will be a burden. It will be a burden on NDIC, because they have to pay off the depositors for the banks that are already insured. So let's look at the holistic, the larger picture, because what we feel is the number is so enormous for CBN to control, for CBN to supervise, so they want to reduce us to a size that they can manage, and I think that is not right. We should be, encouraging other investors to come into the system so that we fill that gap of financial, inclusion, so that at least let's do and then achieve whatever target the government is setting for itself. But if we don't do that, I think, we will just be joking, and at the end of the day, there will be chaos in the financial system, which we don't want to happen at all. Like I've said, we are partners in progress. We are ready to work with the regulators to ensure that we sanitize the system, we make funds available to our customers so that they can do businesses. These SMEs, they are the engine of any economic, development in any country. So if we are down and these guys cannot get these funds from us, I don't think there will be, a positive development in the system.
All right, but I believe, Mr. Ahmed, also that what the central bank is trying to do is also to weed those who would also be problematic in the system. So eventually, everyone may not survive it, but maybe the strong banks will. But thank you so much for sharing your thoughts with us. And we wish you the best in your conversation with the central bank and in meeting up with the deadline in a couple of months. Mr. Yusuf Ahmed is the president of National Association of Microfinance Banks.
Thank you very much. Wishes and then prayers for us.
Okay. All right, so let's move to the markets now. And once again, I'm standing in for Will, and I'm happy to bring you good news. Yesterday, the market closed in the green, very bullish sentiment, almost 2%. In fact, Dangote Cement was added 6.2%, a major driver of the market. Yesterday, the all-share index advanced to 44,608.82 points, and the year-to-date gain increased by 4.4%. The total volume traded actually decreased by almost 10% to 266.33 million units, valued at 3.82 billion naira. Exchange in 4,500. Transcorp was the most traded stock by volume. But we have Tajuddin Olayinka now, stockbroker at Valmont Securities Limited, joining us to tell us, well, how this market hits this almost 2%. Hello, Olayinka. Good morning.
Yeah, good morning, Amy.
Yeah, so it was good yesterday, unlike the day before. Are we having, I mean, Chimi likes to call it ding dong, or has this come to stay?
Okay, if you look at what happened the day before, it was just a marginal drop. But if you look back to the 5 trading sessions, it has been a consistent gain, you know, and with what we saw yesterday, and, with index moving by about 2.3% in the last 5 trading sessions, it suggests one thing that, we are beginning to, we can once a little bit confirm that we now have the commencement of a year-end rally. What is happening is that some sophisticated investors normally will do their research ahead of companies coming up with their full year results. And so with this their research capability, they are able to forecast what those results will be and then take position ahead of that. I think these investors look like mostly popular investors are the ones taking position, doing bargain hunting, to be able to position themselves ahead of the final result that will come in this fourth quarter. So what we are seeing is more or less commencement of year-end rally for some companies. And of course, you also mentioned that of a Dangote cement. The share buyback scheme is also responsible for that. So we are seeing investors taking position ahead of some obtainable benefits. So that is what is happening.
And then Boa Foods, since they're going to the market, they've been having a bull run. But yesterday it seems, is their bull run over or is just on a break?
Well, it's not. I won't say it's really over because of the way they approach the market. Ideally, the day they came to the market, they also have sold significant part of their shares, but that didn't happen. So they've been spending gradually, and more investors are taking advantage of that company also has value. And so what we are seeing there, yes, it may slow down, but it may not eventually go down to zero. So what we are seeing there is just that investors taking advantage of that. This company, apart from the fact that it's a food company, it's also highly diversified in terms of that food business. So investors are taking advantage of that, and we may not say the end of the rally has come for that, but it won't be as high as what we saw at the beginning. So it may begin to slow down because of that these shares are now in the hands of more investors.
So would you say this is a good time for buying into Boa, or it's a bit too late?
Because it's slowing down. If you want to buy for a long time, yes, it is. But if you want to speculate to be able to take profit, I will advise that the investors to exercise caution because the price has moved. The share price has moved significantly. So it is important that whether you enter it as a way of holding, having investment that you can hold for maybe 1 year or more. But if you want to speculate that maybe the price will move, you may be lucky, but it's not advisable.
You may be lucky. So looking at your crystal ball, how do you see trading ending today?
Like I mentioned earlier, it is clear that we are beginning to see commencement of year-end rally. So we will still see the semblance of what we saw today, especially with some investors taking position in Dangote cement. What they are doing there is that they know that they will buy back, the share buyback price will come at a much higher price for what they are buying now. So most of them are actually keying into a certain profit. So that's what is happening in Dangote cement, and that will also drive the market today. We have also seen activities in the industrial goods sector. So that may also help some of the activities in the market today. But clearly, like I mentioned earlier, we are beginning to see commencement of year-end rally. So the market is still maybe not as much as 1.something, but it may still be positive today because of what we saw today and because of Dangote components.
Dangote components. Thank you so much, Ajun Olainka. We will certainly follow the market and see if your prediction comes forth. Have a great day.
Thank you, too.